Hello guys and welcome to the last weekend market breakdown that I do before I go to Thailand for 16 days. While I'm away, obviously you can expect some content from the Magic team members, Kasim, Sebo and Amir. But yeah, this is the last one that I will be doing for a couple of weeks. There will also be a Monday meetup on Monday. And so if you have any questions you want to ask me before I go, then ask them in there. If you can't make that, ask them in the Monday Meetup questions channel. That is there to be used for that if you can't make the lives or the Monday Meetups. Anyway, getting into this. This is our week that we just had. This, what do you call it? Pin bar, hammer, whatever. Candle. And obviously we've pushed down, we've pushed back up, and so it's been an up and down week. Obviously we've had the big news this week. We've had FOMC, we've had NFP, which has done a lot of that pushing. Now, what does this show us? Well, on the weekly, if we just looked at this, we could have thought that, oh, okay, we tapped into this zone here and then we've started pushing down, and it did look like we may just continue down from there. If you look at the daily, the 4 hour, this actually didn't really tap anything significant, or the 15-minute even. So we could, well, because price failed to break the lows from here, we could expect this high to be inducement, to be swept, and then price to continue down from zones above here or even here. Now, so if we go down to the daily, what you can see is, yeah, so we tapped kind of, yes, you could look at it like this, but really what we prefer to do when the zone is so huge is refine down to the wick, and we can see that we've just tapped this bearish body really to the left. So this could definitely be seen as inducement for that. What you'd also remember is we had this high that actually failed to tap into the premium to the left here by a tick or two. So, if we break these highs, we could certainly expect this one to go as well and maybe react from something in here, but we'll see what happens. We do have re-establishment of order flow here, with the mitigation of this minor supply and then a further push down. So we could just continue from here. That would make perfect sense. So you can see on the daily, we cemented a pretty strong low here yesterday on Friday's price action. We mitigated this wick on the daily and we've cemented the low. Expectation now would be actually to break this high that tapped kind of nothing to the left and push into the zone. So we'll see what happens with that. Looking on the 4 hour as well, what do we have? We have, let's just tidy up a little bit. So you can see on the 4 hour, again, if we look at what we tapped to the left, we can see a little bit more clearly on this time frame that this tapped air to the left right there. So what we can see is that we can again expect this to be taken because that is 4 hour air to the left. So we may see some reactions from this unmitigated area here, but overall I would expect this high to go. But yeah, probably going to sweep this as well. A similar thing happened. You can see this was caused by FOMC. News candles tend to get taken. Prices moving bullishly towards it. And what you can see is that this we can see as inducement as well because it failed to tap the premium up here. So a sweep of that leading to a pullback, leading to a mitigation, leading to a further push up into these zones, mitigating those, and then pushing down is something that we could well expect on the 4 hour. So something like this, like little reaction here, and then a sweep of it, mitigating this wick here, a push down, mitigating something down here, a further push up, fake reaction to that zone, maybe. That's just ad lib. And then a mitigation of one of these, and ultimately potentially a push down to the lows. And as we were sort of talking about in the live, if you missed it, you know, if you do get in a trade up here in one of these areas, a nice short, it's probably worth holding a little bit. I wouldn't hold 100% down, but you know, potentially we could break the lows from there, and that's about 600 pips from there to there. So if you get involved with a 2 pip or below trade there, you look at a potential 300R if price does as expected from there. So well worth it. Even if you just held 10% of your trade, you're still looking at some nice profit. So yeah, that's kind of the 4 hour as we see it. Now let's go to the 50-minute. Also, I just wanted to know that I've been kind of experimenting with a new way of, well, not really new, but a different way of marking structure that includes minor, etc. So you'll see I've got some of these lines with dots in here, and I think I've done it more clearly on the 15-minute. You can see. So we had this big move on the 15-minute here where we failed to mitigate. So you see we had this major break, failed to mitigate the discount, there's a minor break, and then the next one failed to mitigate the discount of the minor, so it's a minor break, and I've marked that with 1 dot in the line just by going to text and adding a dot in there. So that's our minor, and then the minor failed to mitigate here, just there, and so that then becomes a minor, which I've marked with 2 dots. So it's just adding a dot if it fails to mitigate. Then it continued up, and again we failed to mitigate this with this next break, and that's a minor. But then still with an ROF, if price is moving in that general direction, the ROF is turned back to major. However, if there's an example of something else, not here. Okay, so let's just draw it out. If we have, say, a major break, right, a minor break here, and then we break that minor, right, fail to mitigate the minor here, we have a minor inside the overall what is a major. Okay, now if we ROF that minor, we now just have minor structure because we're still within that overall major. The highest ROF we can get is back to minor within this, if that makes sense. So let me just mark that out. Okay, so we assume that we had a major break here. Okay, consider that major. Let's just move it down so it looks more majory. Then we had a minor break, right? That minor break got broken, so that's also a minor. We then failed to mitigate that minor, so we have a minor, and I'll pop a dot in there. We then do mitigate that. Now in this trend, the highest form of structure is minor structure, because as I said before, we are still in this major range. So we can only ROF up to minor structure, okay? So that would then be minor structure again. Until we either break this or break the low down here. Okay, then we can go back to major. And now also what happens is, say we break up here, fail to mitigate, then break again. what we've got is so that mitigated, we've got minor. This failed to mitigate, so we've got minor, minor. And then we break the high here. Now, if price pulls back, fails to mitigate the major, and fails to mitigate this, it's still just minor structure because we kind of reset price after a higher structural break, which would be the same as we'd look at things anyway. So that's minor, even though it failed to mitigate this minor, minor. And then when that is mitigated, like this, and then breaks up again, this is now major. Okay? Making loads of copies of things above. Okay, so I hope that made sense. Again, if it didn't, ask in the Monday Meetups questions, and we'll go through it again there. I may cut this bit out and add it to something, to the content, to, so you know what we're doing. And it's just kind of another way of labeling things and including that minor, minor, major, minor thing a bit more in a way that maybe is a bit clearer, maybe makes a little bit more sense. And I hope that did make sense in terms of structural hierarchy and all that kind of jazz. So yeah, another thing I wanted to go through was the whole sweep thing, but actually I'm going to do a separate video on that today. So yeah, I'll probably conclude the weekend breakdown here on the 15-minute wise. Kind of the same situation as the 4-hour. We have had a major 15-minute change to bullish, and so I am pretty confident this high will go. We have had a reaction to it. We've cemented a 50-minute high up here. We could well get a pullback to here, or even to the unmitigated discount down here. However, I would still expect overall this high to go, and again, probably reactions from here for pullbacks, but overall still looking at these areas above getting mitigated. Okay, so cheers guys.